Hi, Scott. Happy New Year.
Yeah,
Good to be back.
happy New Year.
Hey, Andy, how you doing?
Hey guys, doing great.
All
Yeah,
right,
Doing great.
good. All right, so this is our back to the normal schedule of the Trade Ideas webinar parade. Tuesdays is typically the trade of the week. Monday, yesterday was a holiday, so we missed Jamie's office hours, but we are back on track starting right now. And let's just click forward here real quick to remind you what you guys are witnessing. We're basically just trying to experiment and show you guys some really cool technology. We're content providers, we're software as a service publishers. We are not registered advisors. So if you're looking for personal financial advice for you and your family, you got to go visit the guys who took the tests and charge you a fee for all that stuff. We don't charge fees. We just have really cool technology. So that said, get that out of the way. You're not alone with trade ideas. I always like to focus a bit on this slide. This is showing you the live trading room where Barry Anderson is doing a wonderful job multitasking, trading his own account, using trade ideas, moderating a room, keeping a room of over 500 people pretty squared away, and making sure everybody gets a good fair shake if they have a question or any ideas. Great place to go is where we usually send people who are curious about trade ideas first, because again, it's a free room and it kind of gives you a quick look at what's going on. And then, of course, every webinar this week is going to be the same, 5 p.m. Eastern. Tomorrow is going to be the Trade Ideas Q&A, normal Wednesday webinar with Dan and Brad, and then Thursday will be Jamie and Andy finishing up the week on Thursday in Andy's Trading Studio. So I bring all this up to remind you guys that Trade Ideas is a very intense program, very powerful program, and it requires some hand-holding. And we're here to hold your hand, whether it's the live trading room, whether it's the weekly webinars, 4 per week. And then, of course, I'd be remiss if I did not mention when you're signing up for Trade Ideas and you become a member at Standard or Premium, you are entitled to sign up for 1 free hour with us. And we share desktops and we find out where you are, where you want to be, and how to get the program going for you in the custom way in which you really want. And so we can help custom tailor it for you and give you a really good working start. One more teaser before we go. It is January. One of the reasons we've had such incredible growth, in addition to the AI technology being released here, we've had a lot of onboarding success, as I said, a lot of hand-holding, a lot of webinars, a lot of one-on-one sessions, and we feel that we're just going to continue to have that kind of growth due to the concierge service that we wind up giving you guys. And I wanted to just say, if I could go back, if you're a new user or not thinking about using Trade Ideas yet, coming up in January, there'll be more details, maybe not at the end of this webinar, but stay tuned. We're going to have another one of our open houses. And if you're not familiar with that, the open house opens up the Trade Ideas product suite, the whole thing to everybody for 5 trading days for a modest $8 fee. It's a great way to come in and kick the tires. We've had hundreds of people take us up on that offer every quarter, and we'll be doing it again here come mid-January. So keep an eye out for the actual dates and the actual details, but I just want to throw that out there in case somebody's thinking about it. The next promotional period, that is. Here's Holly the AI, going back actually 1 year to last year, 2016. We hope 2017 will be more of the same, continued distancing of the SPY on a point basis, basically showing in the long term, if you zoom your helicopter back, the aggregate winning percentage puts the casino odds in the favor of the Holly trades over the long term. And we'll talk a little bit about today, of course, some of Holly's trades. The agenda, we'll stick with, what we do. Take a look at the market. First day of 2017. We'll go through the Holly recap, a few trades there today. We'll talk a little bit about the new year and what the new year typically brings in rotation to the market, which has an effect on price action. The trade of the week, we will go over that, how we selected it, how it was chosen, and why that one was picked, and what it did today. We'll talk a little bit more about, what's working, kind of in the same vein of what we were talking about with New Year's rotations, and then we'll set some alerts. I like to set a few alerts at the end of the webinar and kind of a takeaway product, and we'll do that to try and do some experiments too to maybe see what's working when we reconvene next week and come back and take a look and see what we've got. All right, so as in typical fashion, I'd like to look at the four major ETFs that we have. These orange lines have all been very significant as we've come along this journey here, but going forward, we'll continue to try and see if we can see any support and resistance levels. Well, there's a big wash, big wide range, I should say, here for the spiders. This level and this level, of course, do make sense. They were prior highs at one time. We want to see this orange line here act as a base. If the market decides to get weak, we have got to hold this base. This is the breakout base. This was basically the high where we petered out. So here's going to be our current wide range, and as you can see, we're in kind of no man's range today. The market didn't do us any favors by tipping its hand as to what direction it wants to go, and we'll talk more about that as a New Year's phenomenon. But the market did give us a nice doji today, which basically had some movement to the upside, some movement to the downside, and then closed pretty much right back where we gapped up and opened. So that's pretty much a statistically noisy day when you see a doji. It basically means it was a hard-fought battle, but nobody won. Sellers didn't win, buyers didn't win. We didn't really tip our hand except with a minor close higher, which was essentially that gap over the weekend. I do want to call your attention to the IWM, which was leading us higher last month after the elections. And this one technically is holding up the best. The Russell 2000 here, the small cap index, this IWM, basically broke out from this level and has not even come back to barely test that level. And I'll tell you what else I'm also kind of seeing here. It's pretty basic, but it's a bullish looking thing. It's what you would call just a flag. If we want to put a little trend line in here, we got to grab this and I can show you kind of what I'm seeing. It's a very bullish flag. The other ETFs and indexes are not quite looking as orderly as this one here, but that's kind of a bullish looking flag there in the IWM. So keep that in mind. That's what I want to see. We want to see this line definitely hold here for sure. Put my crosshairs back on. What have we not seen? We've not seen the Qs, and probably for good reason. They're pretty much a mess. They went from leading us last part of the year to just being really messy. I'm just going to keep these lines in here, even though we broke through it. This was the prior high breakout in the Qs, and then this lower level here was also a prior high before we broke out. So still significant levels. I'm just going to leave here in the Qs going forward. And then lastly, our diamonds, which also were a leadership. The Russell 2000 and the Dow had great leadership. And you can see the Dow also has not given much back, although it did try and test a level here once, twice, 3 times, couldn't close below it, and then 4 with today's lows. So this seems to be a significant level here for the diamonds going forward. Now, this is the first day of a new year. A lot of big money managers are coming back to their desks, opening up their books and trying to really get a handle on, what their model is going to be going forward. Market certainly never really wants to tip its hand in one day, in the first day, so I think we're going to need a few more days to really see what the flavor going forward is going to be here in the first month and where these money managers might want to press change, rearrange, or look for some beaten up sectors or some possible new alpha. You got anything you want to add to this section here, Andy?
No, I think the latter comments you made are spot on. It is a new year. There'll be allocations going all over the place and reallocations. And I think, my last webinar I talked about, the changes that may come in January, and it's a good time to sit back, pay attention to your alerts, play what's working, and that's what Trade Ideas, does for you. It can get your focus away from the major averages and put it in the stuff that's moving. And but yeah, I agree. I said so far the bullish moves are intact, but that could change on a whim. So be prepared. That's the key thing.
One thing I am seeing that that I saw carry over from the last year was the 330 buyer that showed up today. Interestingly enough, the 330 buyer was very prevalent last year in propping and keeping the market bid going into the close. So interesting note there for the most part. That's what I found most interesting today. We could have easily gapped up and then start to set, maybe a bit of a first of the year sell-off, but we didn't. Price action dug in and our 330 buyer popped back in. So very similar to next year. All right, let's see here. Let me put that back. All right. What's next? I think we're going to talk about Holly recap. All right, for those of you that don't know, this is our AI tool. We call her Holly. And a couple of things of note today was the short strategies never fired. Even though we had a point in time when the spiders fell pretty dramatically back down into the gap after a gap up, I'm very surprised that no shorts fired. So what that tells us is that, again, there was a lot of statistical noise today with the giant gap up and the going to lows quickly. There was no real reason that the AI saw to trigger any short trade. So for the most part, our directional bias today remained on the long side. And at the end of the day, on risk on, we've got basically that 3 o'clock buyer that brought a lift to a lot of the stocks coming into the end of the day. I want to highlight a few of the trades here. We'll start by sorting them. And this first one, MLNX. This one, you've heard Andy and I get real excited about when I start to see these types of entries. We love Holly entries, AI entries that are not chasing. Not to say that those don't work. Statistically, they would work or they wouldn't be there. But what we really like are trying to combat the noise in the market and being a contrarian. And sometimes buying a pullback is really hard to do with our own eyeballs. And what Holly, the AI, did here today was gave us basically a perfect intraday pullback level of support right here on that blue tag, 41.35, and then just really nice clean movement into the end of the day. Beautiful, beautiful intraday chart. Love these contrarian entries. And I always say, of course, let's look left. There wasn't as much necessarily to look left on the daily chart today because, as that orange line shows, we were still kind of the high end of this level here and still had some work to do to get above these wicks. But I did want to highlight that a lot of the support buys that the AI kicks out, these are levels we can't see. Holly is looking at the market in a completely different way, and this particular level has statistical significance. And so anytime we see a pullback buy, I really like to give that a little bit of extra credibility because the better the entry, the better the staying power. We all know that in a market like this. So essentially that was risk on and risk off for end of the day. Really nice trade at the end of the day. For a risk on trade that Holly got out of early, and this is kind of typical, let's break this one up a little bit here. MERC, Merck. Here was our entry basically at 1079 early in the morning. It was one of the first trades to fire. And Holly, basically, I believe if this strategy quarterback is a 45-minute hold. If you guys look at the parent window here, these are like all the athletes sitting on the bench, and it gives you a pretty good description of what they're going to do if they get in the game. So a quarterback is going to be basically a time stop of 45 minutes. Well, 45 minutes was the time stop for 10 cents on this trade in Holly, and it just wasn't enough time to work out. Now on this one, if we look left, we got a whole other story here. I mean, my God, look at this daily chart. This is beautiful. Holly triggered above a rash of daily resistance. So again, you got to kind of keep your trader's hat on at times and look at different time frames to see. Not surprised at all that a 45-minute hold necessarily turned into a giant green candle. So this brings up the point. People always say, well, Holly just seems like it's a day trading tool. Well, I got a surprise for you guys. Every trade starts off as a day trade, and you immediately manage the risk reward, and then you start to let it work for you. Well, in this case, as I've mentioned before, this is a perfect example of an intraday AI trade that can turn into a swing trade very easily. There's nothing preventing people from having to get out just because the AI is getting out at 45 minutes. When you look at this chart, you really should be overriding that and saying, there's blue sky above here. This is zero resistance. I'm going to stick around for more. But if you're a glutton for following the rules, what you can do is you can sell half or sell a third and let the other third work for you and start to let that trailing third turn into a swing trade. So here's a great example of MERC starting off as a Holly trade that can turn into a wonderful swing trade that we never would have noticed had it not been for the AI.
Can I add something to that, Steve?
Yep. Jump in.
Well, and not only that, talking about putting your trader's hat on, look at the relative strength in that stock today as the market kind of head faked into the first 45 minutes and rolled over and crashed to lows. This thing just continued to step up on the 15-minute chart there, Steve. But you're right, volume too.
And volume two.
Exactly.
We're not discussing that.
Really. So you had a breakout, you had relative strength, and then you had the volume. Yeah. So there's a lot of things adding up to maybe you want to hold on to some.
Yeah. And I've got an example of a trade around here. It was a reduced risk, and real quickly, for those that are new, Holly exits on 5 reasons, okay? Number 1 is time stop, which we saw has already been identified in the strategy. Number 2 is reduced risk. Let's talk about reduced risk. Reduced risk is right here. Basically, Holly getting in on this trade, it didn't stay profitable very long, and then it hung out under profitability for a little while, and the AI has an algorithm to say, well, you know what, this trade is not working. I'd like to have this trade positive at this point. Let's go ahead and cut it. So it's basically cutting the trade before, and you see way down here the red tag at 427. This would have been the actual stop. So it's a risk management procedure algorithm that Holly uses when the trade's not really working immediately and it's not going the direction the AI had expected. It's kind of like cut your losses, cut them short, reduce risk. Pretty simple. The third one is profit save. Now, profit save comes into play when basically the profit goes into the correct direction, which we'll call it right here. At the end of the day, the profit was moving in the right direction, had enough alpha, and then as it started to pull back, the algorithm of profit save basically is a trailing stop that says this price will not go from red to green. That's the profit save exit. And then the time stop, we talked about that. And then the last 2 is profit target, which we didn't see any today, but we always want to see profit target. That means good news for everybody. And then stop hit. So they only had 1 trade basically today where the stop was actually hit. And if you'll notice, it was a negative 36 cents. That's the most that Holly took as a loser today. So Holly is always going to demonstrate to you not taking big losers, keeping our risks at a minimum. And look at all these reduced risks. A lot of cutting the trades early before they went to a lower price. So those are the 5 reasons for the exits. I want to hop back up here to this one and talk a little bit about a trade around. Now, on the trade around, Holly, again, the AI was on this green candle and in the money quickly, but then slowly kind of pulled back and then just basically cut losses for, as we call it, just 2 cents. Basically scratched that trade. But a lot of times, guys, on the reduced risk and even the profit saves, you want to keep an eye on these things. If you like the chart, keep an eye on them, and you're going to either use, a markup line or use what we call the Holly Trinity, which is using any one of our alerts or Holly and then using our price alerts to come in here and say, you know what, if that price alert gets back above our trigger point, I'm going to call this a trade around from Holly and re-enter that trade. And that right there would be how you do that. And what happened is if you had taken just a few seconds to do that, the trade is still active for the remainder of the day. Even though the AI kind of found a way to wiggle out of it for a small loss, it was re-triggered. And that re-trigger is something that you'll want to pay attention to in the future. So if you see charts that you like where the AI is getting out for small losses and you still think there's a decent chance by the end of the day that could re-trigger it, use that trinity that we have, our alerts plus our right click, which is the price alerts, and then creating that price alert. Once that price alert is created, as you know, it winds up and will pop up like this and so show triggered if it ever does wind up being triggered. We'll come back to those price alerts a little bit. But that's a classic example of using a trade around on a reduced risk or a profit save. Go ahead, Andy.
Well, no, I just want to say you're talking about the Trinity and putting your trader's hat on. Another thing, if you have this sector board available, you can pull it over and see what was on the top all day long was the gold bugs. If you have that available.
Oh yeah, we're going to get to that for sure.
You normally have it. There you go. There you
There it
go.
is.
It was up there all day long. So you had the gold sector at the top. Okay, you have Holly, pegging this gold trade pretty early. A really good entry in my opinion. And yeah, that's the one. Yeah, you got to ask yourself when she's getting out for a 2-cent loss. It's like, okay, that's the best sector on the board, and a good entry. Yeah, maybe you don't want to exit with Holly there, or like Steve's suggesting, do a trade around.
Once again, it's what was I going to say? Oh no, I lost my train of thought. It'll come to me. Let me just squeeze that back down there. So yes, thank you. Once again, it pays to know who the players are. Okay, it pays to have a program. If you're a new trader, you should probably try and go out and find the top 10 semiconductor stocks and get familiar with them. Top 10 gold stock, get familiar with them, and start to really learn which sectors are which, because like Andy said, that was yet another clue that, the sector of the day was gold miners, and what we had here was a gold miner hanging on. A little bit of noise early on in the day as the market found its grip, but the trade around was alive and well, and gold finished very strong. We will get to that. So that's it for the Holly recap. Again, Holly is a statistical player, 13 trades today, not that many trades, but did give us a clue that long was really the only thing of interest in the statistical world of AI. We'll see what tomorrow brings. I will remind people at any moment in time, if you see a clear open position window in Holly like this, and all of a sudden 5 or 6 short strategies fire all at once, that's usually something to really pay close attention to, because the general market indexes might be ready to roll over in sympathy, because what we're getting is an early warning system on some short triggers that are slowly accumulating and working themselves into the indexes. So always keep an eye out for a flurry of directional trades. The same thing can happen to the long side, but when it's quiet and then you see a directional flurry of one either long or short, you don't want to pay attention to that, because more often than not, Holly's got something interesting that we're not seeing. All right, you know what? New Year rotations. I'm going to grab a sip of coffee. My voice is kind of dry. You want to maybe kick us off a little bit on New Year's rotations? Andy, you got some thoughts?
Yeah, sure. You want to actually? Well,
what would you
no,
like?
go ahead. Go ahead. Get your cup of coffee. I can ramble
No, I'm
on.
just drinking. I got it right here. I'm just listening.
Oh, okay. Okay. Sure. I talked a lot about the January effect in my last webinar, and I will actually share that for some of you guys if you want to see it. I don't think Steve. I gave him a copy of it, but he may have to dig it up, so I won't have him do that. But anyway, it's what I love about, one of the aspects I love about trade ideas is that there's so many position in range. You have position in intraday range, position in 5-day range, 20-day range, yearly range, lifetime range. So you can take these ranges and pretty much build. If you have a picture of a chart in your head, you can build an alert to show you that chart. And I built one the other day, and it's very simple. It's showing the I'm looking for something that may have show the January effect stocks that are trading within 15% of their lows of the year, but yet are trading within I believe 75 or 80% of their 5-day high. And I've noticed this, and I'm going to actually talk more about it when we meet again on Thursday, because I shared this alert with people, and I noticed a lot of the trades that came through on Friday, they had a lot of follow through today. So you might be seeing some January effect already happening, and that is stocks that have been beaten up all year last year. You can pull up Sears Holdings, Steve, was one of them, and what do you have is people selling them for tax loss purposes. Okay, they're tax loss harvesting to offset capital gains they've taken during the year. Well, what happens a lot in January is people start buying them back. They do want to be in them, okay? They just want to incur the loss in the prior year. So people end up buying them back. And keep an eye on this, because it's an effect. It's a theory that I see it happen quite a bit. So. I do have an alert for it, and I'll drop it in the window for you guys tonight. And
Okay.
Steve, that may be a good segue into whatever you were going to talk about.
Whatever alert I had, I didn't want to share, because I think you may have done some more work on it. So I'll let you go ahead and drop yours in, and then by the time
I'll
Thursday rolls
drop it
around,
in the chat window there.
You don't have it Thursday. You know, a good, respected educator, Brian Shannon, did also a great job on Twitter over the weekend talking about the January effect. Um, but what I wanted to say is, you know, today we go back to our spiders, and we had a doji. We had really no direction. We had no winners and no losers. But I think over the next 3 days this week, as the heavy fund managers get back into the chair and start running their models and sharpening their pencils, you know, I'm hoping that we get some direction. I don't know if you guys all recall that last year our market direction in January was down, very quickly down, and it took us a little while to recover. So the first day is not really as January goes, but more like the first week, I think, you know, we could consider as so goes January. So let's keep an eye on sectors throughout the week to see if what we're talking about is true, meaning sector rotation, you know, like the guy spinning the plates on the Ed Sullivan show. You know, what was spinning fast last year might be starting to slow down and might need some new spinning. So there's constant juggling, there's constant rearranging and reassessing going on out there. And we're going to try and do our best to maybe try and identify a few possible sectors of interest, which, you know, brings us to the trade of the week. Now, the trade of the week is always derived from Trade Ideas Technologies, and what we try to do is find things that are looking for a major trend change, and a lot of them are going to come off this particular alert right here called the trend change lubricant. We'll talk a little bit more about this, but let me give you a quick example for those who haven't seen what Andy was talking about. How can we find stocks that are beaten up like this that we're looking to try and see a trend reversal? And these are the ones that we're looking for that hopefully will work, you know, for a few weeks, for a few months throughout the year. If we can find stocks that are going through their macro cycles of accumulation, euphoria, then complacency, then fear, then whatever comes next, and then the dust comes from the ashes, and then reaccumulation, early accumulation starts up again. So we're looking for stocks that are hopefully back in their early accumulation mode. So we're usually trying to find things that are beaten down. But there's really only two things going on here, and it goes back to what Andy was saying is the genius of position and range. Whatever we want to define as a range, we can do so. So for this one, we've got position in 20-day range. You know, I back it around. Sometimes it's 85, sometimes it's at 90. I'll keep it at 90. But position and range at 90% is going to give us stocks that, I'm sorry, I actually went one step too soon. Strike that, reverse that. Start in position and year range. We got to back out first. So position and year range, where 0 is equal to a 52-week low, 100 is going to equal a 52-week high, we're finding these downtrending stocks by using position and year range 35% maximum. So what that guarantees is that nothing is going to show up on this scan if it's more than 35% off of a 52-week low. So that's what guarantees us this first look, this first ugly look. But what gets us the basing look and the more interesting look of a higher low is the position in 20-day range. And this is where I just came over and popped in 90 and saved that and said, show me stuff that's real close to making a new 20-day high. If I went to 95, we'd be even closer. But backing it back off to 90 gives us a little bit of wiggle room, some wicks in here, and gives us this type of actual look. Now, would you want to be a short seller? Because the final thing that we do is we work on the short sale side. We look at this list here and see which ones have high short floats. They are sorted to the highest at the top. And then we pretty much come through here and we just try to identify levels and trigger those levels, so if they do get triggered, we'll have a instantaneous knowledge of them. But again, some of these are going to be winding up at the end of our webinar here as we set some alerts, so we'll save that. I just wanted to quickly rehash for those, you know, what is the trade of the week? Is it the scalp of the week where you come in and buy it for 20 minutes? No, that's not what we're looking for. We're looking for longer term days, weeks, hopefully even a couple of months, of course, if we can find the right stock that manages to stay in a trend and not break it. So what happened this weekend? Collaborated with Andy and Jamie, and what we noticed on this Trade Ideas feedback trend change here was we saw two sectors. Basically, one was the real estate sector, and one was the gold miner sector, I should say. So we kind of narrowed it down to those two sectors and then went through the data points and wound up going with a gold stock. And for those of you that follow me over the weekend, I actually kind of telegraphed that I felt personally with my own gut feeling that GDX was ready to maybe put in a nice January effect and start the week off right. So hopefully, luckily, today proved me right, at least in the fact of the GDX. So we found a stock, SBGL. One of the reasons we like this stock is I can show you without a doubt. Look at this trend change, broken trend. We had a high back here in the 20s. We had another high right here on our trend, and then we have right down here the trend line ends. Busted above the trend line on Thursday. Huge end of year sell-off, and again, this type of price action doesn't bother me. I mean, it was much more vicious in the GDX. All it really was end of year pricing, and we get some volatility that goes like that. But back to the SBGL and zooming back out, so we see where our trend line has been broken. Okay, step number one, trend line broken. That's good. A really nice base down here. This particular red candle actually filled the gap, so there wasn't too much of a concern. A lot of other stocks that were showing up on our scans here still had a gap to fill. But SBGL not only already filled the gap on Friday, we liked that technically, and it filled it basically, same thing as a resistance or support level. Trend lines where former trend resistance can become current support, and that's what basically happened on that pullback on last Friday's close on lows. So we got a bit of a gift with a gap up today. Another thing quickly that helped us select this particular one out of the other ones that had the very similar type of trend changing patterns was the debt. There was a lot of gold mining stocks out there that have been taking on a lot of debt. So this is when we use our handy dandy single stock window, try and take a look and see if there's earnings per share. In this particular case, $500 million worth of debt when they're doing $2 billion in revenue wasn't really that big of a deal. It was kind of the other way around on some other stocks. So a little bit of fundamentals came into play here from Trade Ideas, but nonetheless, that is the trade of the week. Now, I'm going to start putting in targets this year. A lot of people ask, well, what about an upside target? And I think it's fair to do that. Our suggested stop is basically do not drop below that low, from the low December. And our upside target really is looking like this level of congestion up here. So what we've got is we're risking $1 to make over $5. And that's a good risk reward. I'll take that any day. But I'm very glad that at least we got off to a good start in the new year with SBGL, not only gapping up and holding a gap, but take a look at this final volume bar. This thing closed at or near highs, and on my volume bar here, it closed at 443% of normal 5-minute volume. So really nice end of day closing on the 5-minute volume as well. I like to use my single stock window to hone in on that as well. So that's our stock for this week. Pretty cut and dry. The lows down here at below 1610 is going to be the suggested downside stop. So when you were buying these things, if your point of pain is $400, well then you need to figure out on the morning where the stock opens and calculate how many shares will be an unfortunate loss of $400 if the trade does happen to get stopped out. We had a lot of trades last year. A lot of them worked, some of them didn't, but the majority of them did. We're working on some statistics to even try and get out to you guys in the near future of how the 2016 trade of the weeks worked. So anything you want to add to the trade of the week that we took there, Andy?
No, I like it. I mean, just keep in mind that stocks, anytime a stock is finding a bottom or finding a top is where volatility really increases. So don't be surprised if you get some whipsaw action down at these levels because it usually, tops and bottoms are usually accompanied with volatility. So so far, not too bad, but yeah, it could come in.
Hey, Steve, do you mind if I pop in for a
Dan, second? Sure.
Hey,
pop in, Dan.
First of all, I want to say hi and thank you to everyone. This is your friendly neighborhood Trade Ideas CEO, and I usually don't come on this webinar, but I thought it'd be so nice to tune in to the first webinar of the year. And I got to say, Steve, you sound great. I hate to compliment.
It's my radio voice.
I'm saying the information's coming through really nicely. And remember, I was pointing out to everyone, and this is a good thing for you guys to know, that this year I'm trading as a small funded individual investor. I put $30,000 in an account, and I'm doing it kind of with you on a day-to-day. And you can follow me on Twitter, and again, we post and repost all of this stuff. But the main thing that I think, Steve, that's really good with you and both Andy are pointing out, I think it's very clear that dynamic of end of the year selling and beginning of the year bargain hunting, because that's what will really, think about the hedge fund space, that's what's going to get these guys to get noticed by their bosses. If they can come up with something, if they can find a Sears that turns around, ergo the trend change lubricant, well, you know, then it's all good. Like, think of the NVIDIA, I think, is actually another perfect example of this. Now, of course, everyone can say, but the Citron research, right? But it could have really been a combination of a lot of those things actually coming together, a little bit of a perfect storm. And that's what I also think, guys, is important for individual investors to really understand, that the market, there isn't one reason, there's a preponderance of reasons and how they all mesh together. And the more that we, again, focus on minute details, we miss a big picture. Like, for example, this is a good time to set alerts for things. And Steve and Andy do this like I do it all the time. And I wanted to, by the way, also, this is the last thing I'm going to yap because it's you guys' show, but I wanted to say that, you know, last year when we brought the AI online and really changed our business, in essence, we kind of started fast and furiously. But we've had a whole year now. And what I suggest is, especially for the people who have the premium service, take the symbols that we have and set alerts for them, you know, in your own price alerts, and that way you can have the system track the AI for you. Do you see what I'm saying, Steve? Because you can basically just say, like in the notation, AI or the date, and just set a price level, you know, and you're good. Like whether it's MLNX or MERC or GORO, all those ones that, you know, that the AI was in, one of the ways that you can do it, and Steve will show it to you, is that, like, for example, you can just set an alert a little bit higher, let's say, right? Like where you would get in if you missed it today, or wherever, you know, I don't even want to specifically, wherever you would think is a good place. You can even say, let it come down to another level, but if it goes, let's say, for me, I'm just ballparking what you're seeing here. For me, if I'm looking at the big picture, I'm saying, okay, if it goes below like 975, I would be totally out of it. Yeah, like right below there. That to me is like where the new step began, right? Because it had that top, pulled back, and then it really started to go. That's the level I would say as I'm outie, you know, and I would maybe even reconsider getting in if it, you know, stayed there and continued higher. But that's called bracketing, and you can do this to every single stock and with multiple different alerts. And this is what ultimately makes our software so compelling, is that on the one hand, during the day, you have the AI bring up a stock to you like that one, or look at, Steve, you and I have talked about gold a little while ago. Look at GORO. That's one that I actually was in today from the AI. And that's just another example. Look at that, like, longer
Here's
term.
what you could do. I mean, yeah, we got a lot of volatility in the past few days, but, you know, if we get back above this level, this might be something that we want to know about.
That's
you know,
right.
Give ourselves breakout.
Or you can just even speculate, say, you know what,
is
it's
gold
going.
doing?
The behavior is simply that there is demand for gold or whatever this gold company is doing at this level, and I want to be in on it. Like that, the simpler you can make it to people, the better it becomes. And our job is to double and improve everything that you're seeing here now. We're working really hard to improve it all throughout the year. You're going to see tons of version updates, AI that's going to be on the web and mobile, so many cool things, and even possibly some AI automation with some of your favorite brokers. So tons of different things happening. I'll say it again. It's never been a better time to be an individual investor with the kind of tools that we have and the kind of things that are setting up the way they're setting up. So, Steve, sorry for taking your show. Just very happy with what I hear from you guys, and great job, you and Andy and everybody else.
No worries. Yeah, we're gonna do the Holy Trinity now. We're gonna set about 8 price alerts and leave some people with some takeaways. So, all right, Dan. Take it easy.
Well, thanks, Dan.
So in that vein, that we don't really know what's working so much and what's not working yet because we do have a new year. We got to kind of maybe play the field a little bit, play around a little bit. We went through the trade of the week and why we found the trade of the week, why we liked the trade of the week, why we chose the trade of the week. But back to what's working. What was working going into the final season? Certainly our 330 buyer was working and helping, and he showed up again today. That's interesting. But the short squeezes, those were the ones that were working like crazy. I mean, as the market continued to go higher, focusing on short float, short squeezes, and pulling alerts off of this trend change lubricant, pulling alerts off of the squeeze me alert that I have, which right here basically shows everything that's about 9 or 10% away from making a 52-week high with unbelievably disgusting short float like NAV and True and some of these stocks that just are driving the shorts nuts. So we don't know. Is that still going to work? Maybe it will, maybe it won't. But we have to really, we talk all the time about having an open mind in trading. The more closed your mind is, the harder you're going to find it. So this is the time of year where we really have to open up our mind and absorb what we're seeing and try and make sense of what we're seeing. And what we saw today was, gold miners started off the year great. Are they going to follow through tomorrow? I don't know. Maybe something else will grab the reins tomorrow. But, a week from now, we'll be able to start to see what's working. And what we haven't said is a lot of shorts. We have not set hardly any shorts when we do these webinars because shorts have not been working. But there's always a possibility they might start working, so we're going to tap into a few of those. We're going to keep it simple today. I love it when I can find a washout bounce candidate, but I had 0 washout bounce candidates today. That's like a hammer candle that I try and identify on the daily chart, and if I can find a really nice daily chart with a hammer candle, I always like to point those out for possible continued movement higher with not so much volatility as the volatility is washed out. So we don't have anything there. This one bouncers here, did some nice work today as a day trading advice. That orange line was basically the long as the price went through yesterday's lows and did not follow through, and so those little couple of day trading 60-minute holds worked out pretty well on the bouncers today. But that's not what we're going to look for. We're going to look for something a bit more in the bigger picture like we have been in the past. So we're going to take 4 from the trend change lubricant factor, and we're going to take 4 from the flipped trend change lubricant, which is essentially the exact same thing as this, but we're looking for stocks and uptrends that are rolling over and breaking new 20-day lows. So this is where we have derived this week's 8 selections. So let's start with the longs. PPC, thankfully, right at the top. Sorting by short float, 40% is an amazing amount. 50 million shares is not that small, but not that big. But let's just look right here. It backed off at highs today after breaking out. I'm going to go right in here onto highs. We're going to set this one for follow through and hope that at 1949 we get some follow through with the knowledge, and this is why I remind myself, trend change lubricant, we've got 40% short the float. That's worth 3 exclamation points. So when that pops up, I can quickly remember this thing's hugely short. And that is not a bad pattern, guys. Higher low, identifying the pivot level here. If you're a short seller, you don't want to lose that pivot level. So put your short seller hat on and try and think like they would. TARO, another one. This one backed off and pulled back a little bit today, but I'm still going to go ahead and set this above the wick of today because for the most part that's pretty much a breakout. So we're going to go ahead and create a price alert for that. And this one has 21% short, trend change lubricant, 21% short, and a very small float of 23, let's say 23 million. Oops. The third long that I want to set that's from here was on earlier, but has dropped off. Oh, no, it didn't. It's back down here. It came back on near the close. PMTS. What I like about this one is 10% is nothing to write home about, but it's got that look where it kind of put in a double bottom down here. I love the sideways action at this pivot point. So it's clear as a bell to me that right here it could be a pop above that congestion level. Only 10%, but I like the congestion level, and one of the reasons I'm going to mark that up as such. Okay. I'll share these with you guys before we hang off. I see a couple people wanting to get a copy, and we'll use the cloud and we'll share a copy of this. The only thing you want to do, guys, is make sure that you are sorting by short float. So the biggest ones go to the top. There we go. Did we set that one? Yes, we did. And the last long that we had is CDR. This one's back up at 16%. This one actually got away a little bit today because it looks like it closed. That high is 666, and it closed at 666. So guess what? 667 is the obvious number here. 17% short if you round up. TCO 17% short, right at the number. So this one very well could trigger right on the open tomorrow, right as the first bell rings. But I wouldn't want to be a short seller if they break out of this range and continue to hold through it. So there's 4 long ideas. I'm coming again off of the trend change lubricant, looking for some ideas for pops above trigger levels, and of course using the higher the short float and the lower the float, the better. But I flipped it, and just so you guys want to see for fun, this is how easy it is. Duplicate, take our long strategy, configure it, flip it, and now it's a short strategy. And that's how easy it is to flip any directional bullish or bearish strategy. So off of these, what I don't like to look for is stocks that have just got giant long candles. Let me see if I can find an example of what I necessarily always don't like so much. I don't like these long candles so much. I'd prefer to rather see some of these long candles. They have a tendency to hit a spot and bounce. But I've got a few that I marked up that you'll see. Some of them have dropped off, and some of them are still on. So I'm going to type them in as they came through to me during the day. XSSXC, what we've got here is it bounced off of that low, but very close to this wick right here. I'm just going to go take the low of that, 1101, and we'll call right-click 11 short. Trend break, 20-day low. Now, these have not been working that well in the last fourth quarter. What I'm going to do is I'm going to start setting them now and seeing if things start to change and winds start to change. I want to know early on if this is going to be a viable strategy. So we got to set a few to see if they're going to work. AAOI was another one that I found throughout the day, and you can see I'm looking for levels that haven't had a long run, but they're defined by certain levels of interest, touching that wick there, that wick there, that wick there in today's close. There's a definable line. So I'm going to use this wick right down here. Actually, I'm going to go back a little bit closer. I'm going to use these because there's a little bit more congruity there. And we're going to right-click right just below there. New 20-day low. I don't know how well these are going to work, guys. We'll find out next Tuesday when we convene. We'll see if they did. Seco was one that was on there at one point, but as the market closed strong, a lot of these started to drop back off. Seco is a level that I'm looking at this wick here, and today's wick basically got real close to it, if not touching it, and bouncing off. So I'm going to use the low of that wick, 971, right-click, set our price alert, 20-day low. And hopefully the market's going down when these things break too, because if the market's ripping to new highs and these things break, chances are they're just going to turn into one of these bouncers where it just bounces below and then pops right back up. That's actually the exact opposite of what we're looking for here. What we're setting these alerts here for follow through. This particular bouncers play looks for a fake out by a couple nickels or a couple pennies and then bounces right back through for a day trade. So we don't want those. But we don't know if we're going to get it. It's a whole new year. Let's see what happens. Last one is still on here, CDW. Basically, just really well defined. I'm going to go all the way down here to these levels. Probably even just cheat just a little bit and call it right there. Price alert short, 20-day low. and we'll save that. All right, so we basically set, 4
Do
longs,
you mind
4
if I give
shorts.
you a couple of longs off the January effect that I think should be
Sure, let's do
take a
it.
look at?
Mm-hmm.
Let's do Juno.
Mm-hmm.
Just one to keep an eye on.
Oh,
It's
yeah,
if we can
okay.
get above that range right there. Yeah.
Let's take a
Yep.
look at those numbers. 82, and this one is 78, so we'll go 83.
Okay.
Right click. Now you see I didn't have it nailed, so I can adjust it here. 83. We want to go long, and this is off the January effect.
Right, yeah.
Okay.
And one other I think you got to watch out for is VRX.
Sure.
VRX popped, been beaten up, laughed
Mm-hmm.
at, but I think you might want to watch this one. A
Say
couple of
what
good
you
days
want
there. Yeah.
about Ackerman and his
Yeah.
inability to do well. Price
That's
action. It's a new year. Where would
right.
you want to put this
I would put it at the top of that wick. That one we got right there. I know it's kind of a ways, but you'd want to clear that level right there.
one? Okay.
Uh,
January effect.
Low risk reward. This is one you could risk $1 to make. Who knows?
5 at least.
Yeah, at least.
I mean, this could very well easily be, where it found congestion before the volatility. It could return to this level if things worked out. Otherwise, the first level is going to be that one. All right.
Yep.
Did you have another one you wanted to work on?
No, that's good. I share. I mean, there's quite a few on there, but these are more of at least mid to big cap. Some of them are pretty thin. So.
All right. As promised, I'm going to share the trend change lubricant, which we use and talk about every single week. I'm dropping that into the chat window. Go to your go-to webinar chat box. Click on the plus sign next to chat, and a window will be there, and you'll see some code. That first code. Actually, Andy dropped in something, Dan dropped in something, and then the last one there from me is going to be the trend change lubricant. And then lastly, we're going to share the price alerts that we set today. We'll even include GoRo, the one that Dan popped in and set. So, price alerts, all we got to do is, and again, I cleaned them all out for the new year. This was the only one that really triggered. It was a trend change lubricant, and it is in the money. Let's see which one it is, Leela. So Leela basically looks like everything else, but following through and closing above the alert today is a decent start. So we will create it on 1-3. All of these down. GoRo went twice. So we'll do the breakout one. Yeah, so GoRo, we're going to select, share, 11 price alerts, copy. So for those of you that have the premium subscription, all you have to do, I will type it this time so you know what it is. Price alerts. And paste. All you have to do is just copy that cloud link that I just sent through there, and those will be added cumulatively to the price alerts that you guys have already set. Anybody that's going to be in the January open house, if you're thinking about doing the January open house, we're going to have a really cool contest again where we use these price alerts and let them marinate for a couple days, and then the winner at the end of the week, who has the best percentage points gained, we'll send the rules out, of course, when the time is right. I'm just teasing you, whetting your appetite, but we're going to have another little price alert contest, which was fun. We did that at our last open house. So same respect there as what we just did. I'm giving my price alerts to you guys, so you just right-click, copy, load from cloud, and those will be added to your alerts. So essentially, if and when they trigger during the week, they're going to trigger for us all together at the same time. All right. Anything else that we want to touch on, Andy?
No, I think we covered it pretty good today. Maybe it's time to bring Scotty in.
All right, well, let me bring up the slides and bring in Scott and talk about what our current specials are. Hang on one second.
Yeah.
All right, Scott, here you go.
Thank you, everyone, for joining us. As a thank you, we'd like to have a code to thank people for participating in the webinar. And I've got a little bit of an echo here. I think that's...
You sound...
Hello?
Don't make me come back in.
Yeah, and muting myself got rid of the echo. That was good.
Talk away.
Well, anyways, Yeah, I'll try. Fantastic. Let me take myself off of audio.
I
So,
heard you there.
I need to thank everyone for attending. We do like to have a code that's good for the month. Year of Holly, as you see it right there, all caps, is an excellent way to go ahead and take advantage of our savings that we offer. 15% off your first month or year of premium trade ideas, or 10% off your first month or year of standard. The primary difference between premium and standard, of course, is access to Holly, the artificial intelligence investment discovery engine, as well as unlimited access to our other premium features like shareable price alerts, RBI, GBI windows, all kinds of good stuff. Now, very importantly, both standard and premium come with a full hour of one-on-one training. So as soon as you sign up, go ahead and go to the support section, click on training, and pick your preferred time and date that's available. It's really convenient and easy to do, and it's the best way to get a head start with trade ideas. If you need to ask us any questions or find out how to upgrade, go ahead and email info@trade-ideas.com. Or you can email Steve directly, steve@trade-ideas.com. Andy is andy@trade-ideas.com. You can follow Steve at Today Trader on Twitter. Trade Ideas 1 is where to find Dan Merkin. We also have @TradeIdeas. And like us on Facebook, Trade Ideas Pro at facebook.com is another great way to keep in touch with us. We do post some different content there from time to time. So we'll get the recording of this up later tonight or tomorrow morning. And thanks, everyone. Thanks, Steve and Andy.
All right. Thank you, guys. Dan and Brad will see you tomorrow.
Yes, excellent. Bye.